Welcome back. You're still tuned into Power Breakfast on CNBC-TV18, and let's now bring you some important macro cues that came through on Friday. Exports for the month of August fell by 9%. This is sequentially to $33 billion from $36.3 billion in July. Imports were also lower, coming in at $61.7 billion, and this is versus the $66 billion that we saw in July. Now, the trade deficit too is lower by around 4.4% at $28.7 billion versus the $30 billion that we saw in July. So that's a recap of what we saw as far as the trade data goes for the month of August. And on this, my colleague Subrahmanyam spoke to the Commerce Secretary about the latest trade data as well as the inflation challenge. So let's listen in to that conversation.
Exports are not down. Exports in the month of August are flat. They are what they were last year. And by the way, every month last year we were breaking records already. So the August figures last year were already at a high. So, last year on a run from April to April this year, we had crossed $30 billion. So it's $33 billion this year, it was $33 billion. We would like them to be rising. But you know that we took some measures basically to control inflation, enable adequate supply domestically, largely in the areas of food, for food security. So we put some restrictions on wheat. We also put some restrictions on windfall profits and exports of fuel. We also put some restrictions on steel and related metals. And earlier last year, we had put restrictions on iron ore. So all that would have an impact on export. But I think the purpose was to increase supply domestically and to control inflation. And I think that's had a salutary effect, and we have been able to control inflation, and the figures are there for you. As things move forward, I think the government is going to look at both the left side and the right side. Exports are as important as imports. So if certain import increases there, and that's also a sign of a very healthy growing economy. The growing economy will pull in imports because there will be an import component in any growth. I think we also need to export, and the government is constantly reviewing the situation on how to see that our exports can be boosted. When decisions are taken, you will get to know that.
Sir, you said that many imports are inelastic. Edible oil, petroleum and coal, of course, they are needs which can't be curtailed. But exports are something which you said that the government is looking at. Not just signing FTAs, but even countries are queuing up to sign FTAs with India. How does India look at this in the larger scheme of things? What are the targets for various FTAs as India looks at getting market share away from China?
Yeah, I think, as I keep saying, India is in a sweet spot. The world has a China plus one strategy. They want to diversify and reduce the dependence on China. And in terms of size and capacity to deliver, I think nobody can match India in this context. So I think that queue is there. Currently, we're negotiating many FTAs. We have concluded 2 with Australia and UAE. We will be concluding UK this month, waiting for a signature before Diwali. We will be concluding an economic cooperation and trade agreement with Canada by December. We will be looking at concluding something with EU, which will be a comprehensive agreement sometime in the middle of next year. We are looking at negotiating on a fast-track basis with the GCC, which is basically Saudi Arabia, because we already have one with the UAE, with SACU, which is basically South Africa, and with also Israel. So I think the trend is good. The world is there. Once you have signed these FTAs, there's very little left actually to sign.
So one final question. You said that the CAD is within limits and is not really a cause of concern. But as far as the 2.5% target is concerned, the CAD is still above that. Any measures particularly being taken on that front? Are you in consultation with other government departments and the government in this regard?
It is higher than last year. It's reaching a zone where we should be watching it carefully. And I think both us as well as finance are watching it carefully, and we will ensure that it does not disturb the macroeconomic stability of the country.
All right, that was the Commerce Secretary talking about the trade